Let me now bring on board Atul Suri. Atul is, of course, a master trader, and he always believes in one theory: the trend is your friend. Atul, the trend clearly is telling us that Indian markets are poised to go higher.
Yeah, I guess that's been the story for a year and a half, and the beauty is that there is no participation. You know, the Nifty was at 4,500 a year and a half ago, and one thing I've always believed, Nikunj, that in very simple method, the basis of any market analysis is about higher tops and higher bottoms, and the market has been holding this trend for the year and a half. My concerns were about a month ago when we touched 5,500 the Nifty. That is where the previous bottom was. So I was a little concerned that the markets would go out and make a lower bottom and, put into question my whole theory that we're in a very long-term bull market, which will take us to a lifetime high and well beyond that. But what came to our rescue a month ago was commodities. The way crude and gold, barring copper, etc., also the way they cracked, I think that was a very, very bullish sign. And that actually, I think, saved our market. Now, as we stand at 6,000, commodities have bounced back. But on the flip side, what has come is a very strong global market. We've been talking about the US markets at lifetime highs. Let me just tell you that there are 9 markets touching lifetime highs today. Argentina, 50% yearly returns. Look at DAX, Germany. Europe is the problem area, lifetime high. Turkey, a 50% year return, lifetime high. Indonesia at lifetime high. Interestingly, even Karachi is at lifetime high. And there are hosts of markets at 52-week highs. So the kind of euphoria that you're seeing in global equity markets is amazing. So in the short run, actually, the spike back in commodities should have been a concern area. The 10% move I thought was on the basis of that. But I guess the baton has changed in the relay, and the baton is now with global equity markets. And the kind of patterns that are setting out there makes you wonder what's happening, because what it indicates to something very big ahead.
But you're also saying that participation is lacking in the market right now.
That's the best thing. That's okay. The best thing. I think one of the best things is that when you're almost at lifetime highs, 3-5% from there, and there's nobody in the market. If you go back, Tanvi, in 2008, when we were at 6,000, you could have seen every guy on the street was in the market. Today, even the professional trader is not in the market.
But I've been told you've participated. Your firm has participated in the month of April. Last 2 weeks have been very good for you.
See, there are good weeks and bad weeks, Nikunj. That is life and that is markets. You get it sometimes, you don't get it sometimes. But essentially, the important thing is the belief. The belief that the fact that we are in a bull market, we continue to remain in a bull market, and I think we will not just cross lifetime highs, we will far surpass them.
So do you think in the next 12 months we could be staring at 7,000, or that's a stretch?
Why not?
Why not?
Why not?
Given the political risk?
That was there even yesterday.
So, but you don't think that...
There were political risks, commodities have spiked, banking...
Yeah, but the election event is still an event that plays out.
We all know it. We all know it, right? It's not that it's something... Essentially, what the market fears are the unknowns. But what is known? We'll see when it comes to it. As I said, these are not real calls or etc. But what I'm trying to say is, or what I'm trying to emphasize is the fact is that you should not fight price. And the prices are saying something else.
I've been interacting with you for over a decade now, a little over 10 years. I've never heard you that bullish.
No. I have been much more bullish earlier. But what I'm trying to emphasize, Nikunj, is the point that what I find interesting is that we are in such a big bull market and there is no participation.
That's your call, or your firm also believes in this call?
That's my personal. These are my personal views and not the views of rare enterprises. Okay. I have a vested interest. That. We could have all positions in what I speak about. These are my personal views, absolutely.
Are you a bit surprised with the market structure? It's no longer, we are not staring at a very polarized market. Pharmaceuticals are looking strong. FMCG stocks are at a multi-year high. IT stocks are marching up. Now even financials have caught up. So, it is a rising tide which is perhaps taking everything up. Broader market really has participated in last 15-20 days.
Absolutely. And this brings out the principle which I have long believed is lifetime highs. Which 2 sectors are at lifetime highs? Pharma and FMCG. And you look at the kind of movement. Yes, they will have corrections. They've had gap ups now. I don't know what's going to happen today, tomorrow. But the fact is that the number of stocks touching lifetime highs and 52-week highs is such a large list, and it's such a stellar list. These kind of stocks, when they touch lifetime highs, an HDFC or an ITC, you can't fight it. You can't fight it. And the trend is up. the freight train is moving, it would not make sense to stand against it.
So what moves next for the market to move higher from here, purely on the index? Like you said, that the momentum is with
Sure.
FMCG,
pharma, private banks.
stocks. What moves next?
I feel that, okay, let's talk about something which has not moved. I think what you pointed out, Nikunj, was IT. I find IT very interesting. Globally, IT had corrected last few months, what happened to Apple, etc., etc. But you see the kind of performance the Nasdaq is putting up and the kind of charts the Nasdaq has made. It's stellar. Of course, it's very different from what's happening to our own IT industry. But our IT stocks also, post-Infosys results, have corrected 10% plus. But what I feel is that they have stopped falling. In fact, they're doing a base building, which is an accumulation phase. And I feel that the next leg, you could see a great participation in IT. And IT, remember, has a very high weightage after banks. And with oil and gas, I think IT is number 3, if I'm not mistaken.
Atul, whereas 80% of the pharma stocks are sitting at a lifetime high, 80% of FMCG stocks are sitting at an all-time high. That is not true for IT.
Sure.
Infosys is at a multi-year low.
Sure.
Wipro is at a multi-week low. TCS at a multi-year high. And HCL Tech is almost there. So the IT space is very polarized. I could say that I can split the IT space right in the middle. So what makes you bullish on the IT space when 50% is down and 50% is up?
What I feel is that, again, it's about going with strength. Even in the IT space, I would not be tempted to go in for something that is smashed and which is at somewhere near 52-week lows. You mentioned some stocks near lifetime highs, 52-week highs. I think that's what I would be in. So really, IT would not be a case of buying the whole basket. It would be of buying those specifics. And even those specifics clearly are the ones that have outperformed in the past, which continue to do, but which have just fallen a victim to the recent weakness in the sector as such. But I feel that some of the names you mentioned, like, again, I may have a vested interest, like a stock like TCS and HCL Tech, and they are stellar charts. Nothing has been damaged. It's just a beautiful correction, and I feel that these will all go out and make new highs.
So the 6% rally from the recent low, you would consider this as some kind of a beginning of a new trend. This is a trend-changing rally, and one should not worry about the speed or the pace of the rally. In fact, one should capitalize on the current market momentum.
I think so, because what's going to be very important for us, see, we are at 6,000. 6100, 6111 was the Jan high, which is a 52-week high. But what's going to be very important is lifetime high. As I said, there is nothing as or more powerful than lifetime high. So we are not very far in percentage terms. It may happen, may not happen. Maybe the market corrects before that and then takes off. We don't know. But I would just urge people to respect that and realize that when markets break into lifetime high, when stocks break into lifetime highs, you have some amazing trends. And we can point out a lot of negatives. I mean, domestically, the parliament's not working. We've not had many great RBI policies, blah, 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 etc., etc. But the fact is, the chart, the ticker, the price is saying something else. And at the end of the day, for a trader, I guess that is what's important.
Well, markets, they always do what they want to do,
exactly.
Not what you want them to do.
Exactly.
That's all maxim, isn't
exactly.
it? Okay, Atul, in the past, we've seen that the dollar index was the lead indicator of what global markets and equity markets would do. Sure. So from a 3-month perspective, from a 6-month perspective, an average viewer, an average trader who's watching the show, what should they focus on? Should they focus on the Dow? Should they focus on crude? Or should they focus on gold?
I don't know. I wish I knew. You're right that, we would look at the dollar index a couple of months ago and got direction. But the fact is that has been absolutely placid. In fact, even our own currency has been very quiet. So that has not happened. I personally would look at commodities. As I said, my short-term concerns are commodities. In a bigger positive scenario, the way commodities have bounced back, I for one would be very skeptical in the market right now. But the fact is that that also is not working, because global equity markets are going on. So at the end of the day, it's like Nikunj, a lot of variables.
Are you playing the currency, Atul?
Yeah, you do, but it has to break out. It has to make a certain range breakout, a certain directional breakout for you to get into it. The fact is that it does, and it's not substantial. The action is really happening in equities, and that's happening globally. So Nikunj, for me, as I said, it's very difficult to pin down a variable. At the end of the day, I believe that we discover these variables long after the variable has lived its life.
Only.
Yeah, in hindsight, that's 2020 perfect vision. Then you say, oh, it's correlated with X, Y, Z. It's correlated with global equity markets, but tomorrow the market, no, actually it is connected with commodities because commodities were up. I didn't see it coming, and then it becomes currency. So, a lot of us are in the business of finding reasons, and we will find reasons.
When would you raise a red flag, rather? What would be that turning point?
For me, I think it is going to be commodities. I really think that, this current move started with commodities. And commodities have bounced back, especially let's take Brent. At 106 was the breakdown. It's like 104, 105. Very often when breakdowns happen in a big asset class, they pull back to the breakdown level, test it, and then come off. So maybe it is testing, and if it comes off, I feel that our markets will get a fresh boost. Indian markets have not done so exceedingly well.
3% for this year.
Exactly. They're not. I mean, you look at Japan and blah, 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 the developed markets. So we haven't really done so well. But the fact is that we may get into a period of outperformance, relative outperformance to global markets in case commodities start coming up. In case commodities zoom up and, the global flows continue to remain. But the fact is that we may not do so well. Essentially the issue is that relative to global markets, I mean, am I getting a smooth run? The 500 points was a smooth run. But in spite of all the talk of the last few days, barring a few stocks, it's not been very, very smooth after that level. So for me, commodities would be important. Coming back to your question, where I would focus there would be what will happen to Brent, especially does it hold 106 and goes down after that? What will happen to gold? Because these are things we know that affect the Indian market.
So if gold goes to 1500 and if Brent goes to 110, would you cut your Nifty longs?
I think the market would
No, you're hedging yourself.
I would not even bother. I think the market would take me out much before that.
Okay.
I mean,
so what is your big Nifty stop loss then?
What I am actually watching is the Bank Nifty.
Okay.
What I have noticed is that the Bank Nifty is a lead indicator to Nifty for the last few years. Very often early breakouts or early breakdowns happen in Bank Nifty and Nifty will follow by virtue of the weightage it has in that. So if let's say the Bank Nifty is at around 12,600 or 700 right now, for me 12,250 for the Bank Nifty is a very important level.
Just write it down.
12,250. Why I say that is, yeah, sure. because it has been a bit of a bottom of a range for the last few days. In fact, 3 days or 4 days ago, the market went to that level. The Bank Nifty went to that level and recovered very sharply. So I would look at that level. In case that goes, I would be getting nervous on my longs.
Anveer?
Yeah, I'm just listening. I'm actually absorbing all that Atul is just stating. Rate sensitives essentially. Atul, you've spoken about the Bank Nifty. Yeah. What about autos? What about real estate? Any infrastructure names? I mean, what I'm trying to assess essentially from you is, yes, there's been a run-up. We've seen that. But what about a catch-up in the market? Where will the outperformance come in now?
There is a school of thought, especially with the domestic players. See, the domestic players, as we earlier mentioned, have majorly missed this run. Now, if you tell them to buy an FMCG or a pharma, they say it's run-up. And they have been, and that's the problem with these sectors for years. Whenever you recommend an FMCG stock, they say, "Ye to bahut chal gaya. Iska valuation is too rich, blah 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 blah, महंगा hai." Whether it's the stocks you mentioned at lifetime highs, and that has been the story for a decade. But essentially, you are best off as an individual if you really sat through all those rather than all the gyrations that the other things gave. So the domestic thought process is coming that, boss, this has run up too much. Yeah. But the FIs continue to chase that, and that's where the money is. We know the flows what are coming every day. So the domestic thought process is coming that, yes, now it's time to get into rate sensitives. So they're looking for beaten down stocks or for sectors or things where things may turn around. That is why you see late in the rally catch-ups happening in infra names, etc. But essentially, you got to ask yourself the question, what survives? Ultimately, this game is a game of survivorship. You get into them. Do you really get out of them? Do you really make money in them? Do you get out at profits? Or just that it becomes a part of your portfolio and another piece or another cog gets sucked into it?
One should avoid metals, one should avoid real estate, one should avoid infra. Stay with quality. And names, FMCG and pharma names can still make money for you.
Sure, I think so. And see, that is a trader's viewpoint. It may not be an investor's or a value investor's viewpoint. His viewpoint will be, in fact, he'll be looking at 52-week lows and things like that. That's a different mindset and approach. But from a trader's viewpoint, we have seen it for the year and a half. I mean, how much money have infra stocks made for traders, or how much have some of these rate sensitive? Each time you get in late in the rally, so they've already run up. Number two is that they correct so fast. And if you don't have the discipline of a stop loss, you will find your portfolio getting filled with these stocks. And when the next rally happens, that these guys are still not moving. Still the ones that are moving up are FMCG and pharma. So you're always feeling left out of it.
But the other rule of trading is that nothing goes up in a straight line.
Sure.
We've seen a virtual straight line move in a Sun Pharma, in a HUL, in a ITC.
Sure.
Things have to stall one day.
Absolutely.
Things cannot go to, cannot go to sky.
Also, but we do not know where they will stop.
So give me an example. What kind of upside do you think we could be staring at for A quality FMCG and A quality pharma names?
Nobody knows.
Asking you
Nobody knows.
Question.
Nobody knows. The only thing I can do as an individual is
buy them and have a trading stop loss?
Absolutely. Because who knows? I mean, if you look at the stock, look at Sun Pharma's chart for 10 years, 5 years, 1 month, whatever time frame. I mean, every time it was expensive, every time people gave reasons. But hey, look at the performance there is. And where can it go to? I don't know. Nobody knows.
What about Reliance's chart, which has been a dud?
See, Reliance has been an underperformer. And, every time in every rally, especially towards the fag end of the rally, Reliance starts performing. And people say, okay, now is the time of Reliance. Reliance is going to get into the act and perform. Right? And again, as I said, at the earlier point, you get in. But can you get out? Do you make money and get out? Do you make a stop loss and get out? But most people find that, it just remains. Arey, Reliance hai, acha hai, bhav aayega, kyun bechenge? And then you find yourself getting absorbed. Your capital gets involved, emotionally you get involved, and you miss out on some of the more sublime trades there are. So as a trader with limited capital who is looking to ride trends, those are spaces, it has to do a lot more, I feel, to attract some trading volumes. So the quick
summary of our today's interaction is that things are looking favorable. Don't ignore equity as an asset class. Don't complicate your life. Keep it simple. Stick to FMCG and pharma.
I would think so. But my short-term concern, as I still want to repeat for the market, is what's happening in commodities. Okay. If crude and gold again rally back, the short-term breakdowns do not come true, I think there would be concerns for our market in the medium term. They may still remain stable by virtue of global trends, but in case global markets correct, we will really take it in the chin simply because of our dependence on these commodities. So be very careful whatever you do, whether you trade in the most beautiful, sublime stocks, but make sure that you protect yourself, because in the short run we are not. It's not gung ho really.